Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index, of which this is one of them. Before we get started, I need to read this to you, and I'm going to try to do it in one breath again. I think I failed yesterday. Let's see if I can do it this time. The website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Almost. So close. Let's take a look. Okay, we're looking at a 30-minute chart, and it sure looks like this red line that we have been looking at for a while is at least providing some resistance for now. This was a fairly, what's a good way to put this? Even it was only down 0.5%. Where it happened and the way it happened, I think, I think today was a significant day, and I think it's going to set up a little bit of a downtrend. I don't know how deep it'll go, but we need to take a look at a few things and make some considerations. For all practical purposes, we're still looking at this line right here as being the important thing. Because that is our most aggressive line that takes us off those mid-April lows. And then the next important line would be our rising yellow trend line. But this has been proven back in mid-April to be porous without necessarily causing a lot of damage. So we'll just have to sort this out here. But today we started out with the markets were up. Now I think the Dow did pretty well due to Cisco, but we're looking at the S&P right now, and I'll remind you that this red line has its genesis going and it moves around when I move in and out of some of these different time frames. It has a tendency to wiggle around a little bit, so when I go back I'm going to have to fix it again. But anyway, that red line basically served as a support line for much of December and the first month and a half of 2013. It would break occasionally. The first time it broke, no biggie, got right back up into it. The second time it broke, it has stayed underneath this line the whole time. Now, as we go back to the 30-minute chart, you can see that I've had to move that trend line again to make it in its proper location. You can see that that really the S&P, I think yesterday got over it just a little bit, but here as I look at it here on the 30-minute chart, it doesn't look like it really did it. That's funny. Maybe that line jumped around on me just a little bit yesterday too, making it look like, well, maybe there's that one little candle that got over it. But for all practical purposes, the line was tagged as it was back in April. That set off a sell-off that lasted about 6 days. So if that were to happen here, you could say that that the selling would have begun yesterday around midday, really, because that's where the high was on the tag of this line. But let's look at it on a 5-minute chart, because there's a couple other little details here. I think it's kind of interesting. We actually made a very small head and shoulders, and what's interesting is we got a little symmetry here. Got a little double left shoulder, a head, and then a little bit of a double-ish sort of right shoulder. Now this has a very upsloping neckline, which means it's not as meaningful as a flat neckline, because a flat neckline it's very easy to measure. You know that you're going to get you're going to get the distance of the head to the neckline from whatever spot that breaks. Now, here's why I say it's not quite as easy when you have a sloping neckline. The reason is I have seen the slope of the neckline, both tops and bottoms, sometimes measure out a little differently than a flat neckline or a neckline that is down sloping. And what I mean by that is this. If the market were to do nothing but go sideways yesterday, then by the end of the day it could be at 1650. And there have been times when that alone would settle the minimum expected downside target. Does that make sense? The reason is because this line is sloping up. That tells us that there's even though this is a little top, it tells us there's still an undercurrent of bullishness. So as that undercurrent carries forward, this is like the tide, and these are the ripples. Well, tell you what, I tried to say that, and I think I failed at it. But basically what I'm saying is you may not get the full downside target of this because of that pretty aggressively upsloping neckline. But we're going to measure it just the same. That target measures to 1644. So it looks like it's got a little ways to go. And if it goes down to 1644, guess what? We've got a little line here that is, show you where this is drawn. We're going to make this a little bit darker. Tell you what, let's make it orange. There we go. And this line actually has its genesis over a number of tops that we now are over. So, what do we know about these lines that are moving up when you get out over the top of them? Well, you can't count on that line really being of much assistance to the market. In this case, because that happens to coincide with what our measurement is from our little head and shoulders top here, may get a bounce on this line. But I would really expect to come down eventually to this green line, because that is our longer term channel that we're looking at here. We tagged the top twice before we even got close to this line. So now may be a good time for the S&P to come down and test this channel that developed off the April lows. Now, this is getting a little involved here, but bear with me. We sometimes see channels within channels, even wedges within channels, and you can see this marks our bottoms in the intermediate term. This marks our bottoms in the long term. But what if we start here and draw a trend line through our last bottom right here? It looks like this line wants to break. We closed under it by just a little bit. And if we get the action we're expecting from this little head and shoulders top, we will break this line by a more significant margin. Come to daddy. There we go. So, here's this line. If we get our minimum expected target, then we're going to be, well, still only about 9 points underneath that. But I think this little line is worth keeping on the chart. So coming into today, again, we don't really have any discrete pattern to look at other than this tiny little upsloping head and shoulders. But I want to show you something else. That coming into today, we were looking at either this green line or this red line as being resistance. Okay? Now we move that resistance level down a little bit to these two lines, to the neckline of this pattern and to this blue line. So now I would expect resistance tomorrow. If the market were to rally, I would expect resistance up around the 1660 area. Additionally, if we break this line by a more significant margin, I would expect this line to also be resistance. You can see all of these lines that we're talking about being resistance are all sloping upwards. So that means that doesn't mean that we're going horizontal and we have a really critical horizontal level of support, and if it breaks, then we know we're going to plummet. No, but what I'm saying is, because these lines are upsloping and they're broken now, we expect these to turn into resistance. But since they're still going up, the market can still go up. So until we get a pattern where we have some more horizontal features, or a larger pattern that projects a more impressive target, we're still kind of stuck with what we were doing coming into the day. And that is watching this line right here. So guys, that's about the best I can do for today. Little head and shoulders right here, pointing us down to about 1644. And if that breaks, we should find some support down a few points lower around the 1640s. Now if that breaks, then we've got some air underneath us, because I don't see a whole bunch in the chart other than possible horizontal support at about 1623. That's a very possible area for a horizontal support level. I'm going to make that light gray. There you go. So, gosh, this chart's a mess. I need to do some housekeeping here. But again, I think this is the most important line. And by the way, feel free if you're a subscriber, you can go into the live chart area and open up this chart, and you can watch the candles update in real time. And I would suggest to you, and I'm sure many of you do this already, feel free to clean this thing up and get rid of stuff that you don't think matters to you anymore. But I would try to keep some of these important lines on here. But I do a little house cleaning from time to time. But frankly, I haven't. I probably need to do more, because as I look at this, and if you're a newcomer to the website, you're probably going, man, what the heck does all this mean? Well, what it means is this line is broken. This line broke. This line broke. We're expecting to come down to at least this line, and if it breaks, then what's underneath us should provide support. So really, wherever the price action is moving at the time, the way the chart is set up right now, the lines that are above us would be resistance, the lines that are below us would be support. Hey, that's pretty simple. Maybe that ought to be the rule from now on. Hey guys, I appreciate you taking time out of your day to watch this, watch the video, and I really especially appreciate your support. Please, everybody, take care, and wish you the best this week.